I'll get straight into it. Next slide, please. Just forward-looking statements. I'll let people familiarise themselves with that at their own leisure. This presentation is on our website for anyone who wants to have a look. Getting straight into Sarama. Sarama is a dual-listed company. So we listed on the TSX and the ASX. We undertook our Australian listing last year in May. We raised $8 million in that process and put it to work straight away. But basically, Sarama's in Burkina Faso. We've been there quite a few years. We're in the southwest of the country. You can see in the imaging there, Burkina is a big country. So we're in the southwest, so geologically and geopolitically, that's our kind of preferred place to be. We hold a very large and highly strategic land position in that area. So our main project there is the Sanatura project. You can see in the imaging there, Sanatura is the red project, and you can see it predominantly sits in the Houndé belt, which it's a very well-endowed gold belt. The value of the company is basically underwritten by that project. There's a multi-million ounce resource there. It's around 3 million ounces and growing at this point in time. And importantly, from our point of view and from a development and cost point of view, about a third of the resources in oxides, so sits within 50 metres of surface and it's free dig, and 2/3 is over 2 grams a tonne. So it's a kind of pretty typical West African deposit for this part of the world, but it's substantial and it sits within a very large gold trend. The main deposit, Tankora, which currently hosts about 2.5 million ounces, sits in a gold camp-sized mineralising system. So we have Endeavour to the west, where they've got a 1.2 million ounce deposit. So within a kind of 5 or 6 kilometre radius, there's 3.7 million ounces there. So it is a very well endowed part of the world. The drill program that we did last year, we did around 21,000 metres of drilling. That was primarily focused on high value near surface material, and we intersected multiple areas of shallow high grade oxide mineralisation, all outside the modelled resource. So it was a very successful program. We had 7 new discoveries within the mineralised corridor. All of that's highly accretive. It's all shallow and it's all high grade. The resource itself, sitting at around 3 million ounces, is already through the critical size to support a development. So to that end, and I guess looking at the cost of capital in recent years, we're undertaking a PEA, which is a Canadian term, effectively for a scoping study, but it's a little bit more detailed than that. But basically, it's looking at the development options that we've got, and we're really focused on a low capital multi-stage mine development, and that should be out in the middle of this year. And I think anyone who's kind of tuned into this webinar, who's got an interest in gold, will be very much aware of the movements in gold price in the last few months. And one thing that Sarama has is a lot of gold price leverage. So obviously we've already got a quite a significant gold resource that's trades at a significant discount to our peer group. That resource base is still growing, and then I think importantly, we should be in a position fairly soon to crystallise the value of that and move the project forward. Next slide, please. On the corporate side, we've got a very experienced board and management team, which I think for the jurisdiction where we work, and particularly working in Africa, it's fairly key. So I won't go into a lot of detail on that, except to say that my background is mining operations. Worked for Western Mining originally, did a business degree in the UK, and since then have been offshore. But I worked in Russia. I was the president of Moto Gold Mines, so we found the Moto Gold Deposit, or the Kibali Gold Deposit, which is now the biggest gold mine in Africa, doing around 800,000 ounces a year. So I ran that company and took that through to takeover by Randgold and Anglo Gold, and that's now owned by Barrick. Paul Schmiede, he's a mining engineer as well. So we're a little different skills mix for what you'd normally see at a company of this stage, but I think that gives us the ability to look through the project and see where it can go. Jack Hamilton, VPX, is the guy that found Moto and has been in Africa a long time. So, the management team has all been around that part of the world for quite a long time, as has our board. We pretty much cover all bases from exploration through, feasibility, development and production. So I think of that, Steve Zaninovich, he's a former director of Lycopodium, and he's a project and feasibility guy. So where the company's at the moment, he's a pretty important guy. The capital structure is fairly clean, and the shareholder makeup is quite good. It's a good mix of institutional and retail, and some very long-term and supportive shareholders. Next slide, please. Just quickly on Burkina Faso, it is a very well-established mining jurisdiction. A lot of Australian and Canadian companies have had quite a bit of success there. Probably the most notable in recent times is West African Resources. There's 9 gold mines in operation. The country produced around 2 million ounces last year. Projects are still getting financed and built on time and on budget, which is pretty important. There's 2 mines, Orezone's looking to extend their Bombore project from 140 to 250,000 ounces a year, and West African's looking to develop Kiaka. So it is an active jurisdiction. There is a few geopolitical issues in country, but I think companies continue to navigate that as we do. Next slide, please. Looking more closely at the Sanatura project, there's probably just a couple of takeaways from this slide. One is, I guess, the amount of gold in the area. So our Sanatura project that sits there is best part of 3 million ounces. We've got a joint venture with Endeavour Mining that joins us on the west, with it's about 700,000 ounces on that project. And then Endeavour have a project next to us called Bantu that's 1.2 million ounces. But importantly, probably 70 or 80% of those ounces sit within 150 metres of surface. So this area, it's got a long way to go from an exploration point of view. And the mottled red and purples you can see on the screen there, that's soil signatures from soil sampling. So I think the point to note there is that these are big gold systems. They all start at surface, and we use soils as a pathfinder here. So when you look at the Tankoro deposit itself, next slide, please. When you look at that deposit itself, that sits within a mineralised corridor about 16 kilometres long on our project and runs for another 5 or 6 onto Endeavour's ground next door. That corridor itself is about 1 kilometre to 1.5 kilometre wide, and 80% of the resource sits within the central deposit area, and 70% of the ounces are within the top 150 metres. So it is a very well-endowed belt, but we think there's still ample space to make new discoveries, which our last drill program basically supports this. And the oxides through here push to 70 metres in depth in the southern area. So, from a mining point of view, it does look very good. Next slide. Just briefly on the Tankoro deposit in that central area I was just talking about, we do see some very high-grade areas through there, and you see in those pit shells where they bell out is where get these high-grade shoots. You can see some of the historical drilling down the bottom there, which I won't run through, but some pretty solid intercepts in there. But importantly, in the last drill program we just drilled 21 metres at 7.5 in oxide from surface, outside the resource, but within areas that are already modelled. So areas that are going to be mined. We're finding new zones that haven't been drilled yet that are exceptional grades, and obviously super accretive to the long-term development picture of the project. Next slide, thanks. We've also made a new discovery in the southern part of that Tankoro deposit that I was just talking about. This is very different to what we've drilled historically in the area. So this looks like a flat quartz vein. So anyone who remembers Orbis, they had a project called Natugu that was bought by Semifo. This is a flat quartz vein, or looks like a flat quartz vein. It's very different tenor to what we see in the area. It's flat. We've drilled it for about 900 metres along strike and about 300 metres down dip. But importantly, it's open for 1.8 kilometres along strike. Plus it's open to the south and pretty much every direction. I think a couple of the takeaways here is the elevated grade. You'll see we've got hits there, 7 at 11.5, ended in mineralisation. So it's quite spectacular grades. It's extended the oxides here to 80 metres as well, which is important from an exploitation point of view. So this is quite exciting. And just on to the next slide, thanks. And talking about potential as well, this is Bondi. So we acquired this from Orezone. So this is about 30 odd kilometres north of Tankoro, the area I was just talking about. The main takeaways from this is if you look at the historical drilling in this area, it's quite well drilled in the top 70 to 100 metres, but below that, it's not very well drilled and it's not very well targeted. we remodeled all of Orezone's drilling. And what you see from that is the block model on the screen there. But what's noticeable is in the higher grade areas, which is the kind of pink purple, which are 2.5 to 5 gram blocks, there's very little drilling below those areas, if any. So we see that all as upside. And if you look at some of the historical drilling in the area, you're getting 50 at 5, 60 at close to 4, 70 at 3. They're all within kind of 30 or 40 meters of surface. Some of them start at surface, so that's all upside as well. Next slide, thanks. Next slide, thanks. So just looking at the regional opportunity, obviously we have Endeavour next door to us, so there is a significant consolidation opportunity, and it's obviously conversations that we regularly have with Endeavour. If we put all of this area together, you have a 5 million ounce project with a lot of runway, and then we've got a number of high quality exploration targets that we haven't really put much drilling into. So that's kind of it for the company. Just next slide, thanks. Next one. So really, there's multiple reasons for investing in the company: a big strategic land position, a large resource, a significant amount of gold price optionality. So anyone taking a medium to longer term position on gold, we pretty much tick a lot of boxes on that, and line of sight to a mine development that the PEA is going to flesh out. So thank you very much.
Thanks, Andrew. Now, obviously, the obvious question, is that there's significant geopolitical risk in the country. There's no travel advice from the government. There's been a couple of coups and then suspension of the constitution. Against that, you've got some excellent gold grades. How do you manage the political risk? Is that why you're kind of being discounted by the market at present?
Yeah, I think the geopolitical side of Burkina, it's not just Burkina, it's this whole part of the world, Mali, Guinea, and all those countries have similar kind of issues. Yeah, it is something that obviously takes more management time, and it's something that you really need to understand the granularity of. I think when you look at Burkina Faso as a jurisdiction, whether you have a so-called democratically elected government or the government that we've got now, you're dealing with the same bureaucrats. There's changes at the top and a different focus, but it's the same administration essentially underneath that. With respect to the security side of things, obviously there's quite a few bad headlines coming out of the country. We operate in the southwest of the country, which I think, I made the comment earlier, is our preferred location from a geological and a geopolitical point of view. The areas to the north and to the east are the ones that are, particularly poor and generate a lot of bad headlines. So I think the key to operating there is actually understanding the granularity, making sure you remain apolitical and you keep a very open and transparent dialogue with the government that's there, and just continue to really work on your relationships. But I think the fact that Orezone just built their Bomboro project on time and on budget, and that's 140,000 ounce a year mine. West African's in the financing stage for Kiaka, which will be a $400+ million build. It shows that companies are still getting things done, and I really it's weighing up the geological risk versus the political risk, and we think the political risk is well and truly discounted into our valuation.
I was going to ask you if there are any other big gold players in the country. In that regard, what are the resources like there in terms of infrastructure and labour and things like that?
Yeah, being an established jurisdiction that it is, there's been modern mining going on there for some time now. So there's 9 mines operating. Where we operate, it's good infrastructure. The closest paved road's about 30 or 40 kilometres away, and that's a main highway. There's power lines in the area as well. So one of the things we're looking at is how we tie into the grid, which most of that's hydro-powered out of Ghana and Ivory Coast. So from that side of things, infrastructure, particularly from an African perspective, is very good. And from a skills perspective, it's a very well-established industry in Burkina Faso. And I think, if you look at the 2 lowest cost gold producers on the ASX, 2 out of the bottom 3, Perseus and West African Resources. So, the geological opportunity there is exceptional. And then you just have to weigh that off against political risk. But, if you look at SRR in the north, I think did 480,000 ounces last year. And that's way up in the north near the Niger border. And West African, when Kiaka's online, that'll do, I think, 400,000 ounces a year. So, it's a very well established and well-known gold jurisdiction with a, modern mining code that's fairly transparent.
And it looks like your cost basis from a CapEx perspective is pretty low. How's this possible?
Yeah, it's kind of interesting when you compare that part of the world. I know the CEO of Orezone Gold, and obviously he's just completed a build. But the last 3 projects there have been built on time, on budget. I think part of that is driven by the fact that to actually get financing to build something in Africa, you jump through a lot more hurdles than maybe what you do in more established jurisdictions. So I think a lot of the development and construction risk is taken out. Our approach to the project is going to be a little different again. We're looking at where we operate and the financing markets, and we're actually looking at doing a staged development, and with a modular builds, we'll fabricate most outside the country. So that will actually lock in a lot of the capital costs before we even start, and make it, we think, more easier to finance. And where we're looking to get things fabricated, we should be able to get export funding as well. But the PEA that we're currently doing will, I guess, flesh that out further and give a lot more granularity to us and to the market on how best to take it forward in the next step.
Thanks, Andrew. That's all we have time for. Have a nice weekend, and we'll get you back on later in the year.
Thanks, Tim. Appreciate it.